seafarers, if you recall, when our doctor of the therapeutic doctor was talking about underwater engineers, he told us, he said, they insure all the seafarers. Now going to ship acquisition, when you want to buy a ship, you have to insure. And so many things in the industry, in the maritime industry, requires insurance. But we all don't know. We need to have those that have the expertise to talk to us. And that will help us in knowing the subjects where to choose. That is why this program is called Catch Them Young. So that at a young age, before your WAEC, you'll be able to know, okay, this is where I'm going, this is what I have to know. And interestingly, this special guest of ours did not start off as an insurer. She's a qualified lawyer, an accomplished lawyer with the chambers, before veering into the insurance industry. But today, she's a guru in both legal and insurance. Hello? Hello?
Hello, Ma, we can hear you.
Hello, we can hear you.
Hello, Ma, we can hear you.
Okay. I only wanted to know that I have the audience and the ears of my students.
Okay.
So this morning, we have the rare privilege of meeting Mrs. Ekeoma Ezeibe. She's a master's degree holder in law. Girls, listen very well as I read out her biography. I want you to listen because I'm going to ask you questions based on that. She has a master's in law, and she did not start off becoming an insurer like I told you. She was called to bar 33 years ago after obtaining her LLB degree from Imo State University, now Abia State. She's an associate of the Chartered Institute of Insurance, London. Have you seen that? She has deviated from law to insurance. So how did she get into the insurance world? When she started her insurance career, it was when she was serving in the legal department of Nigerian Reinsurance Corporation. And thereafter, she got a full-time employment there. That means that she leveraged on the opportunity that was opened to her working and serving at Nigerian Insurance. From there, she decided to carve a niche in the insurance industry. After she got her full-time employment with Nigerian Reinsurance, she later left in August to join Liberty Assurance Company Limited as their company secretary and legal advisor. Have you seen that? And also the head of claims department. So she has leverage on her law degree and her insurance. So she has 2 degrees, 2 caps for one woman. And that is the growth of the girl child. The girl child is always consistent. She is stable and she is progressive. And later she joined Industrial and General Insurance Company, IGI, in September 1992 as the pioneer company secretary, legal advisor until 1995, where she resigned to start Crystal Trust Insurance Brokers Limited, along with some distinguished Nigerians as its founding managing director, the position she holds till today. Can you see that? You can see the combination. She hasn't jettisoned her first love, which is law. She's still going ahead. She has a chambers, and she is now the MD of an insurance brokerage firm. Now, let me tell you how I met this wonderful woman, because Ocean Ambassadors is very, very grateful to her. In the course of me looking for a marine insurer, I put a call through to the first female president of Nigerian insurance brokers, in the name of Mrs. Oshijo. And I phoned her, I said, look, you're an insurance guru. I need someone that has an insurance background that can talk to my students. We're particular. I want them to have the various phases of maritime careers. And she said, oh, that is not a problem at all. You have Ekeoma Ezeibe. She's a fantastic lady. She mentors. And lo and behold, I spoke with her. And surprisingly, I have never had it this good. She just said, oh, when do you want it? I said, oh, on Saturday, madam, because my students, they've been waiting and they've been disturbing me that when will we have our marine insurer? And I said, oh, okay. And the next thing she said was, how much will the webinar cost? I said, oh, we normally pay $100, but we don't get funding. Ocean Ambassadors does it by ourselves. And the next thing she said was, oh, no, don't worry. Since it's Insurance Day, she'll be the one to sponsor. So she's our sponsor for this rare opportunity, this webinar that we're having today. On behalf of Ocean Ambassadors Foundation and the girls, and even the boys, because I know the boys are here also, we're saying thank you very much, ma'am. We really appreciate you. We're not taking you for granted. We're sorry we're starting late, but our students, most of them are in the boarding school, and their teachers must release the phones for them, but they're all here now. Most of them are here. So it's a rare privilege. Our sponsor, our special guest, Mrs. Ekeoma Ezeibe, the MD CEO of Crystal Trust Insurance Brokers Limited, a seasoned and accomplished legal practitioner also. She is also an associate of the Chartered Institute of Insurance Nigeria. She is a governing board member for the 9th year running of the Nigerian Council of Registered Insurance Brokers, where she currently chairs the legal and help desk committees. She's a past honorary treasurer of the same institute, and for 2 consecutive years. Over the years, she has served in various other committees, not just in NCRIB, but in the entire insurance industry. She's one of the recipients of the recognition of female trailblazers of the African insurance industry at the 46th conference of the African Insurance Organization in Johannesburg, South Africa in 2019. Mrs. Ezeibe, for so many years, is one of the facilitators at the Nigerian Chamber of Shipping, where she lectures executives on different topics in marine insurance. She equally facilitates courses and seminars for the Nigerian Council of Registered Insurance Brokers, the Chartered Insurance Institute of Nigeria, and the insurance industry as a whole. Mrs. Ezeibe is equally one of the insurance professionals selected by the Chartered Institute of Nigeria as mentors, like she's going to mentor us today for its mentorship program. She's a partner and consultant to the law firm of Ezeibe and Ezeibe. Today, we are highly blessed. So with that, we say good morning to everybody, and we now usher in our special guest. Mrs. Ezeibe, you have the floor. Good morning, madam. Sorry we're starting late.
Good morning, madam. Thank you so much. Thank you. Thank you for those accolades. Good morning, everyone. Good morning, my dear children.
Good morning.
I hope you have a rewarding day today, even though we are starting late, but not to worry. Let's see how it goes. I want everyone to feel relaxed, please. What you don't understand, please note it. And when we get to the question and answer session, then you can take it up with me. Insurance is normally a very technical subject, but I am going to try very hard to be elementary, knowing that you are all drawn from SS1 and SS2 in secondary schools. So by listening carefully, it is interesting, I can assure you. And just like she pointed out, I didn't start out reading insurance at all. I read law, both for my first degree and second degree, but because I happened to find myself in an insurance company. And then I now, so even while I was there, I worked in their legal departments. But then I said, I better just take the professional exams and even understand this subject more. Even when I left there, I also worked in other insurance companies as legal advisor. So law has actually been my first love, but then deviated into core technical insurance. And since then, I've not looked back, even though I have not looked back on my first love, law either. So you can actually combine that. I noticed that one reinforces the other, as we can see when we roll. I'm going to share my screen because I've done some slides for you, to be able to facilitate my talk to you this morning. Thank you very much and happy listening. Can the host please enable me to share my screen?
Yes, please, ma'am.
Thank you. I still cannot share my screen, please. Is it possible you allow me, please? Can the host allow me to share my screen, please? Is it possible for the host to allow me to share my screen, please, so that I can get on with the teaching? You're muted, madam. Mrs. Williams, you're muted. Is it possible to please get the host to come and allow me to share my screen? He disabled participants from sharing screen. Once he's able to deactivate that, then I'll be able to get on with the session. Thank you.
I think there are Flowers suggests that the host is out. I'm not sure what that means.
Maybe whoever the host is, left or something. I don't know. Hi, bro.
Hello, Jide, what's happening? Hello, ma.
Hello.
Hello.
Please. Yes, please.
Can you share it now, please?
Let's see. I can't. The host disabled participant screen sharing, so I can't share.
Oh.
The host disabled participant screen sharing. Whoever the host is should just should enable me. Then I can share.
Okay. Just missed me today. Oh God, I suppose I don't want to do this thing.
All right, children, while I'm waiting to do that, the class has to be warm. I hope I have your attention, please. Children, can you unmute yourselves because I want to be sure.
Yes, ma'am, we can hear you.
Okay, you can hear. We have to get on with it. And when I'm enabled, then I'll then start sharing the screen with you. It would have been easier to follow me if you were seeing the screen, but nevertheless, we have to make use of whatever we have until we achieve what we want. And I would like to start with the definition of marine insurance. And there's no better definition for me to use than that provided for by Section 1 of the Marine Insurance Act 1906. By the way, Marine Insurance Act 1906 is an English act. It's not a Nigerian act, but we have the Nigerian equivalent. The reason I'm referring to the English act is because marine insurance is of international nature. Therefore, it is not just only an area that concerns insurance of Nigerian vessels and we just go to bed. The reason is because even the ships, when I say vessels, I mean ships, even the ships that are owned by Nigerians can also sail along the international waters. They can sail outside of Nigeria. They can go to Europe. They can go to the United States. They can go to other African countries. And therefore, it is of international nature. And because the UK market, that's the United Kingdom insurance industry, is largely the one that is most developed in matters concerning insurance. That's where you have what we call the Lloyd's market. Therefore, as of necessity, all the ships you see plying the Nigerian waters, most of them, if not all, have an insurance placed in the UK market. And therefore it is of international nature. That is why we like referring to the Marine Insurance Act 1906, which is an English act. And that section 1 says, listen very carefully, children. It says that a contract of marine insurance is a contract whereby the insurer undertakes to indemnify the assured in a manner and to the extent thereby agreed against marine losses. That is to say, the losses incident to a marine adventure. Let me explain something to you so that you can understand that definition. It says that, it simply is saying that when you own a ship, you go to an insurance company to insure it so that when something happens to the ship, the insurance company, because you have paid them what we call premium as part of your contract in order to secure that contract. If something happens to it, if it is destroyed, if it is damaged, then the insurance company will come in and pay for the damages and pay for the repairs or pay for the replacement, assuming it is totally destroyed. And for that damage or replacement, what insurance companies consider is to put you back to the position that you were immediately before the loss. That is what we call indemnity. And therefore, marine insurance contract is a contract of indemnity. And indemnity simply means that insurance company is saying, if you insure with me, I will put you back to the position that you were immediately before the loss. And which position were you immediately before the loss, if you ask me? The position you were could depend on what happened to the ship. It could be that the vessel was damaged. So insurance company will repair it to the extent that it was just before the damage. Or if it is destroyed, they will replace it, but not with a new one, because giving you a new one will mean you're getting more than indemnity. And remember, I told you indemnity is the thing you pay for when you buy a marine insurance contract from an insurance company. Therefore, what the insurance company will do is to check, how old was this vessel? Does it have wear and tear? Has it become old? It is no longer shiny and brand new. It has stayed for X number of years. And then depreciation will apply so that they will determine the actual extent of the value of that vessel immediately before the loss. That is what insurance will give to you. This is because doing no otherwise would then mean that you are going to get more than indemnity. Thank you very much. I can now share. So let me share my screen, please. Can you all see my screen, please?
Yes, ma'am. Yes, ma'am.
Yes, ma'am.
Okay. So what then happens? Remember, I mentioned indemnity. Indemnity here is the key word. Indemnity here is the key word. If you don't, hold on a second, please. Let me share it properly. So indemnity here is the key word. If you cannot get more than, what the vessel looks like, immediately before the accident, or immediately before the damage, or immediately before it was destroyed. So then now let's look at how you insure that ship that you have bought. And remember, there are different types of ship. It could be a tugboat which you use to rescue. It could be a very big ocean liner which you use for cruises. It could be like the one I have on the screen now, on the right-hand side of my screen, that carries cargo. You can see it's carrying containers, and those containers are carrying goods that are being shipped to a certain destination. And so if something was to happen to that vessel, when I say vessel, children, remember I mean ship, any type of ship. So whenever you hear me say vessel, that's what I mean. So before you even begin to allow that ship to ply anywhere at all in the world, you must have your marine insurance certificate. It is by law. Otherwise, you will be operating illegally. Otherwise, you will not even be allowed to operate at all. That is why marine insurance is key in the maritime sector. If you don't have that insurance, you cannot operate. And therefore, if something was to happen to this vessel, it is damaged. And let's say that it is Felix that owns this vessel. Felix then took an insurance, marine insurance policy with an insurance company. The name of the marine insurance company that Felix Okoli took is called Marine Hull and Machinery Insurance. The body of the vessel is called the hull, the body of the ship. The body mass is called hull, H-U-L-L. But then the hull itself cannot move without the engine. And the engine is the machinery I'm referring to. And therefore, the marine hull and machinery insurance covers both the body mass of the vessel and the engine. And therefore, Felix Okoli then buys marine hull and machinery insurance from an insurance company. And therefore, when this vessel is damaged, Felix will go to his insurance company and submit the cost of the repairs of the damaged vessel. And insurance company will pay him in full. But let's assume that Felix had that accident. When the vessel had that accident, the vessel collided with another vessel, another person's ship. That Felix's ship collided with another person's ship and damaged that other person's ship. So Felix is not only talking about the repairs to his own ship, but because the captain of his ship, the captain is the driver of the ship, because the captain of his ship was the person that was careless, was at fault, and hit somebody else's vessel. Felix's marine hull and machinery insurance will not only repair Felix's vessel, but will also repair the other person's vessel, but will only repair it up to the extent of 3/4 of the cost of repairing that other person's vessel. While Felix's vessel is being repaired in full by his insurance company. But the ship that Felix's ship damaged, insurance will only take care of the cost of its repairs only to the extent of 3/4. And therefore, the remaining 1/4 is left not covered by Felix's insurance. And therefore, you will ask me, what will that owner then do about the 1/4? It then means that that owner will have to go to Felix himself to bring out the 1/4 of the cost of the repairs and pay it by himself. The reason that insurance has made it so, the reason that insurance will not pay for the remaining 1/4 is to make sure that people who have ships and buy vessels is to make sure that they navigate their vessels very carefully when they remember that if they hit another person, they will come up with 1/4 of the cost of repairs. They will become careful when they are navigating. That is the reason insurance made it so. And it could also be that when Felix's vessel damaged the other ship, that other ship is called third-party ship. Third party because that other person who owns that ship is not a party to the contract of insurance that Felix bought from the insurance companies. The insurance company that gave Felix insurance policy is the first party. Felix, the person that bought the insurance, is the second party. That other person who owns that vessel, that Felix's vessel damaged, is the third party because he is not a party to that Felix's insurance contract. And therefore, Felix's insurers will take care of 3/4 damages, the cost of damages of the third party vessel. And it could also mean that in the vessel of that third party, that some people inside that vessel secured injury as a result of that accident. It could also mean that some people, in fact, died in that accident. What Felix's insurance company will do, they will pay 3/4 of the cost of treating the people that secured the bodily injury. Felix will be responsible for 1/4. Then people that died, Felix's insurance company will pay compensation to the family of the people that died up to 3/4 of the cost of settlement. Felix will be at the cost of 1/4 because that is what he contributes into the policy to make him be a responsible citizen and manage his affairs more carefully in order not to disturb other people's activities as well. So marine hull and machinery insurance, which is what Felix bought for his vessel, will cover his vessel for damage to his vessel or replacement if it is total destruction. If he hits a third-party vessel, it will cover the cost of repairs to the extent of 3/4. And if there are people in that other third-party vessel, it will cover them up to bodily injury of 3/4 of the cost of treatment or 3/4 of compensation to the deceased family if there is death. The remaining 1/4 of the third-party liability will be taken care of by Felix himself. But if I was teaching a full adult class of insurance, I would have delved into what will happen to even that 1/4, how Felix can still take care of the remaining 1/4 by insurance. But I will not want to go there. That side is very technical. I'm just trying to teach you the basic things. And so this is it for marine hull and machinery insurance. But remember, when Mrs. Williams was doing her introductory talk, she spoke about seafarers. She spoke about other human beings that operate in the maritime sector. It could be that Felix's vessel, Felix's ship, was carrying people as at the time that his ship had an accident. We have talked about people who are in the vessel of that third party. What about people in Felix's vessel? They may have been injured as a result of the accident, or indeed someone might have died as a result of that accident while inside Felix's vessel. Let me explain to you the different types of people that could be in Felix's vessel. Number one could be those that work for Felix's shipping company, including the captain, because those are his employees, they are his workers. The marine hull and machinery insurance that Felix bought will not cover them. they will not cover them because another insurance policy covers them. The actual insurance policy that will cover Felix's employees, Felix's workers, is called Group Personal Accident Insurance Policy. That policy will cover Felix's employers, whether they are in his vessel or they are outside his vessel. Therefore, where one insurance policy stops, another insurance policy takes over. They don't overlap. One stops and the other takes over. So his staff will be covered by Group Personal Accident Insurance Policy. Then those that died that are his staff will be covered by Group Life Assurance Policy. That's what will cover them for his workers. And Group Life Assurance Policy will pay the family of the dead staff of Felix. Another set of people that could be in Felix's vessel could be people that he invited into his vessel. They could be contractors. They could be people that he has business relationship with. But the important thing is that Felix invited them into the vessel, and therefore they are legally in Felix's property. If they are injured or someone dies, the insurance policy that will take care of them is public liability insurance policy, because they are classified as third parties, but they are legally on the ship of Felix since he invited them. Those are the second set of people. The third set of people that could be on Felix's ship could be those that came to steal. Even if they didn't come to steal, for the mere fact that they were not invited into the vessel and they came there maybe as stowaway, they are considered to be illegally inside Felix's vessel, and therefore insurance will not pick up any claim concerning them because insurance does not cover illegality. And so that is it for marine hull and machinery insurance. We have treated how you insure the vessel. Now let's look at what about this vessel that we're seeing on the right-hand side of this screen. You can see that that vessel is carrying containers, and those containers are carrying goods. Some may be carrying cars inside them. Some may be carrying vaccines. Some may be carrying furniture. Some may be carrying clothing. Some may indeed be carrying food. What about those ones? What about vessels that are carrying goods? And therefore, in insurance, we call those goods cargo or freight. So now let's look at how to treat cargo or freight. Now that we have seen how we treat the vessel itself. And so for cargo or freight insurance, in insurance, what provides for them is called Institute Marine Cargo Clauses, or ICC. Institute Marine Cargo Clauses. What they mean is they are a set of terms that marine insurers put down together to govern how they insure goods for people. And those are the terms that, depending on what you have insured, they will look at those clauses to know the terms that they have put down there that will govern how they are insured. And these Institute Marine Cargo Clauses were put down by cargo insurers in the UK called Institute London Underwriters, ILU, or American Institute of Cargo Underwriters. And so they brought out those terms of contract And those are the terms that govern the insurance of goods while they are plying on the sea. But you see, when you are doing cargo insurance, it is not only goods that are being carried by ships that are insured under marine cargo insurance. If you are carrying goods by trucks on the road, lorries, the lorries that you see carrying different goods in Nigeria on our roads from one town to the other, and it may be even from the port in Apapa to anywhere in Lagos, they are also covered under marine cargo insurance. They can also be carried by air. When they are carried by air, they are also covered under marine cargo insurance. It is the same terms and conditions that govern them, whether they are being carried by ship, by sea, or whether they are being carried by trucks on the road, or whether they are being carried by aircrafts in the air. The carriage are all covered under marine cargo insurance. It is the same terms and conditions that cover them. And there are 3 ways of insuring those goods. And the 3 ways are called Clause A, Clause B, and Clause C. Clause A, Clause B, Clause C of Institute Marine Cargo Clauses. Clause A simply means that it is the widest cover. We call it an all-risk cover in the sense that when you get it, when you pay for it and you have that insurance, it means it is going to cover your goods in the event of different types of things that happen to it. And therefore, it is the most expensive cover, insurance, marine insurance cargo cover. The most expensive is Clause A because it covers so many things. It covers your goods against so many things. For instance, let me give you examples. If you are carrying, like the vessel we're seeing on my right-hand side, if at the port of entry, they are leaving that wharf, and someone now steals one container carrying goods there and leaving the rest, Clause A will cover it for that loss, and they will pay you for that missing container carrying goods. And also, if you have reached your point of final destination and somebody steals part of these containers and you have Clause A, they will pay you. But if you have Clause B, because Clause B is smaller than Clause A and therefore is cheaper than Clause A, if they steal any part of this cargo and you have Clause B, you will not get anything from the insurance company because Clause B says you must lose everything that you have insured in that consignment for Clause B to pay you. If it is partial loss, Clause B will not pay anything. And then you have Clause C, which is the cheapest cover. Clause C covers less than Clause B and of course less than Clause A because it is the narrowest cover. Clause C will only cover you when the ship has sunk and you lose your cargo.
Hey.
Therefore, ordinarily, the best cover is Clause A. And children, listen to me. I said ordinarily, the best cover is Clause A. But Clause A is not necessarily the best cover because it depends on what goods you are carrying that you are looking for insurance. For example, if what you are carrying is not in pieces, like the containers we are seeing stacked on this vessel, assuming it is just one thing you are carrying, say for instance, probably one large generator that cannot be stolen in pieces. If you want to steal it, you must steal everything in one whole. Therefore, you don't have any need buying Clause A and paying high for it because it cannot be stolen in bits. You then go for clause B to save cost, because clause B will only cover you when the thing is stolen in whole. And so when you have an insurance broker like me, the insurance broker will then advise you when you want to insure. Will now know what you want to insure and then advise you of the best cover that is suitable for you, and therefore you save cost. That is it for the goods. And then let us think of some principles of marine insurance. When I say principles, I mean the things that the insurer thinks about or allows to guide him or her when placing marine insurance for the customers. There are so many of them, but I have brought out the 5 core ones to talk to you about this morning, and they are all provided for by the Marine Insurance Act 1906, and they are all governed by the marine insurance that we do here in Nigeria. The first one is utmost good faith. Utmost good faith means that whoever is coming to buy an insurance policy for your vessel or your cargo, because you are the one who wants to insure, you are the one who knows more about that thing you want to insure than the insurance company. Therefore, the law expects that you must show the insurance company utmost good faith by telling them the truth of everything you know about that thing you want to insure. The insurance company will not know it because they are not the owners and they are not in possession of it, but you are the one coming to insure it, so you know it better than they. Let me give you an example of where there is a breach of the duty of utmost good faith. Assuming you buy a vessel in 1957, the vessel was built in 1957, and then you now go to an insurance company to insure it for you for marine hull and machinery insurance. And then that vessel was rebuilt in 1990. And then the insurance company, in a form that we call proposal form, now asks you, what year was the vessel built? And you write 1990 instead of 1957, which means you have told lies. Probably you told lies, believing that if you write 1990, you will present it as newer than it is, and insurers probably will reduce the cost of insurance for you. But the insurance company will know, because no matter what you have claimed, they will still send a surveyor, a marine surveyor, to go and survey that your vessel and let them know the truth about the things that you have claimed in your proposal form. And therefore, when the marine surveyor finishes inspecting it and discovers that indeed the vessel was built in 1957 and not 1990, like you claimed, what will happen in that instance is that the insurance company will be right to tell you, we do not want to insure again because we do not trust you. The insurance company might also say, even though you told me lies, I will still go ahead and insure your vessel and pretend as if you did not tell me that lie, since we have not lost anything by that your lie. In law, what we say is that that contract has become voidable. Voidable meaning that the insurance company can avoid that contract, can avoid insuring you, or they can decide to go ahead with insurance. That's what we call voidable. That's the effect of the breach of the principle of utmost good faith. Then we go to insurable interest, the principle of insurable interest. Before you can insure anything at all, you, the person looking to insure it, you have to show that you have insurable interest in that property that you want to insure. And how do you know that the person has insurable interest? You have insurable interest when you are in a position with that thing that you want to insure, such that the safety of that thing will make you gain. And then the destruction of that thing, on the other hand, will make you lose. Once you can establish these two things, that the safety of that thing you want to insure will make you gain, or conversely, that the destruction of that thing you want to insure will make you lose. If the answer is yes, it then means you have insurable interest in that thing you want to insure. And once you have established that you have insurable interest, it then means you can go ahead and insure it. And in other types of insurance policies, like motor insurance, life assurance, other types, you have to establish that you have ownership before you can have insurable interest. Therefore, like when your parents buy cars, if they are insuring their cars, they are showing that the cars belong to them, that they own that car. If they don't own that car, they cannot insure it. But in marine insurance, you do not necessarily have to own a ship before you can have insurable interest, before you can insure that ship. Ownership alone does not make you have the right to insure. You can also insure if you are in possession of that vessel. Let me explain to you. This vessel that we are seeing here that I told you belongs to Felix Okoli. Felix Okoli can go and obtain an insurance policy for it because he owns it. And then me, I can decide to go and hire it, hire the vessel, hire the ship from Felix for me to use in doing my business, even though it doesn't belong to me. Once I have hired it from Felix, possession is with me. It therefore means that I have insurable interest, because if something happens to this vessel that I have hired, I will lose. If it is kept safe, I will gain. It means that my business for which I hired it for, I will use it to be running that business. Therefore, I have established insurable interest. Children, it may even be indeed that I do not own this vessel and I have not hired it. It may be that another person owns it, another person hired it, but I could have insurable interest in it if it is carrying my goods. If I am using it, I bought some things and I went to the person who hired it to help me carry my goods to a certain town or a certain destination. It means if that ship is safe, I will gain because my goods will arrive their destination safely. It also means if something happens to that ship while on the way, it then means that I may lose my goods that are aboard that ship. Therefore, it means also, as someone who owns the goods that are atop of that ship, it means I also have insurable interest. And therefore, I can take out a marine hull and machinery insurance on that vessel. That is insurable interest. And we have proximate cause. Proximate cause says, before, assuming this vessel has an accident, before insurance can pay me, insurance will like to know what caused that accident, the reason for the accident, is it covered by that insurance policy that I bought? If the cause of that accident cannot be traced to what is insured, insurance will not pay. And therefore, whenever any claim occurs or an accident occurs in a marine policy, or indeed any insurance policy, insurance companies will want to know what caused it in order to know whether that thing that caused it is covered by insurance or not. For example, it may be that this vessel that Felix insured is going on the high sea and then runs into a war zone where fighting has broken out, and then it is destroyed as a result of that war. Because war is an exclusion, it is not covered by marine insurance, anything caused by war, because it is an exclusion. So it means that the cause of that accident is traced to war, and therefore insurance will not cover it because insurance does not ordinarily cover war. Even though if this was an adult class, I would have told you how you can make insurance cover war, but that is out with this class, please. Therefore, to determine the cause of any loss is important before a marine insurer knows whether to pay for the loss or not. And then we go to indemnity. Indemnity, I have mentioned it before when I was defining marine insurance under Section 1 of the Marine Insurance Act. Indemnity is the reason that you buy insurance. Indemnity is the thing that you have paid for when you buy an insurance cover. And indemnity means that if there is a loss, insurance company is saying that I will indemnify you, meaning that I will put you back to the position that you were immediately before the loss. So what you have bought when you buy an insurance cover is called indemnity. That is a promise by the insurance company to put you back to the position that you were immediately before the loss. And then we go to subrogation and contribution. Subrogation and contribution arise from indemnity. Without indemnity, there cannot be subrogation and contribution. Let me explain to you, children, the meaning of subrogation. It might be that Felix bought a marine hull insurance for his vessel. It might also be that the other person that Felix's vessel negligently damaged also has his own marine hull insurance. And therefore, when that accident happens and the other person that Felix's vessel hit, even though Felix's vessel was at fault, that other person, that's the third party, can decide to go to his own insurance company and report the claim, and they will pay him in full because he bought an insurance policy from them. When that insurance company, when he finishes paying Felix, that insurance company, when he finishes paying the third party, that third party's insurance company will now enter into that third party's shoes as if they are the third party and then go and claim from the Felix's insurer. And then Felix's insurer, because Felix's is at fault, they will pay that other person's insurance company back. That is subrogation. You subrogate the right of the insured and then go and claim as if you are the insured. The insurance company is now making claims on the other insurance company as if they are the people actually insured. Subrogation of right means transfer of right. claiming another person, insured's right in order to go and get compensation. That is subrogation. And then you have contribution. It may be that Felix decides to do as if he is smart, what we call in the local language to do Oboju style. Felix can decide or might decide to go to an insurance company A to insure this his vessel. And then he goes to insurance company B to also insure this same vessel. And when this vessel has an accident, maybe he insured it for 1 million naira in insurance company A, 1 million naira in insurance company B. And then when the vessel is destroyed, he now goes to insurance company A to claim 1 million naira. He then thinks that he will go to insurance company B to claim another 1 million naira, which means 2 million naira. If he gets 2 million naira for something that is valued at 1 million naira, it means he is getting more than indemnity. Children, do you understand? I have told you that you do not get more than indemnity in insurance. You only are put back to the position that you were just before the loss. If Felix succeeds in getting 1 million naira each from the two different insurance companies, he has insured the same vessel. And whereas his vessel is worth 1 million naira, it means he has gotten more than indemnity. It means it is illegal. It means it is no longer insurance. And therefore, what insurance does to stop such a thing from happening is when Felix goes to insurance company A to claim his 1 million naira, insurance company A already knows that he has another insurance with another insurance company because they all connect each other. So every vessel, if you go and type the name of a vessel online now, it will show you every detail about that person, the names of the insurance companies and everything. And so they compare notes. But the insured Felix might not know this. And so immediately he reports his loss to insurance company A. Insurance company A will immediately contact insurance company B, and both of them will contribute 500,000, 500,000, put it together, 1 million naira, and you pay Felix. Therefore, Felix will be getting indemnity and not more than indemnity. That is called contribution, and it is contribution by the insurance companies that Felix insured the one ship with. That way he does not get more than indemnity. Then we go to claims management. What we call claims, children, is when a loss occurs. If you have an insurance policy and a loss occurs, it could be an accident, it could be damage by some other means, it could be by theft. They are all losses. So you go and file what we call a claim. And that claim, you file it with the insurance company that has insured that your vessel or your goods. When you file the claim, you file it by reporting the loss. And it is advised that you report that loss immediately it happens. Because if you wait and you don't report it immediately it happens, if you wait for 12 months and then you report it on the 13th month, insurance will not pay because you have reported it outside of time. And therefore, it is advisable that whenever a loss occurs, you immediately report to the insurance company. And then when you report the loss, then the insurance company will now write back to you to start submitting what we call claim substantiating documents. By submitting claim substantiating documents, you are trying to prove indeed that a loss occurred, that you have suffered a loss, and you are showing documents supporting that you indeed incurred those losses. So claim substantiating documents could be the receipts that you used in buying the things that were used for repairs, the money that you paid the engineer, the receipt, the parts that you have bought that you want to change. You submit all of those things. And if it involves another vessel, like the examples I have been giving you, maybe Felix's vessel hit a third-party vessel, you submit police report. You also submit what we call protest. Protest shows you that you are claiming that it is the other party that is at fault. That claim or statement saying that you're claiming the other party is at fault, in insurance, we call it, in marine insurance, we call it protest. So you submit all of these documents, and the faster you submit them, the faster the processing of your claims will be. Sometimes you hear when people say insurance companies waste time in paying claims. Most of the time, it is the client that wastes time without knowing it, because if you don't substantiate your claims, if you don't submit those documents, they will have nothing to work with to pay you your claim. And I would like to talk about two important things in marine insurance that we call assignment, and the other is warranty. The reason I want to talk about them is that they have effect on your claims. Assignment means that if Felix, as he owns this vessel we're seeing here now, decides to sell the vessel to another person, when he sells it together with his marine insurance policy that is still in existence, that is still running, that has not expired. So when that happens, then if he sells this vessel and then there's an accident, the new person that has bought it from Felix can go and claim from Felix's insurance company to pay him, because Felix has assigned the insurance policy to the new owner. That is assignment. And therefore, Felix's insurance company will pay for the claim, will pay the new person the claim. But before the new person buys it, if the new person buys it and the person has to check first whether there is something in Felix's insurance that says he cannot assign that insurance policy. If he says he cannot be assigned, then if Felix goes ahead, the person cannot claim because assignment has been stopped. He cannot transfer it to another person. But if it is not stated on that policy, then the assignment will be recognized and the claim will be paid. Then there is warranty. Warranty are some of the conditions that are in the insurance policy that says you must do this or you must not do that. For instance, in that insurance policy, which means the contract of insurance, my insurance company will write there that Felix's vessel must at all times be driven by a captain. Assuming someone who is not a captain goes to go and drive or navigate it and it has an accident, it is called a breach of a warranty. Therefore, insurance will not pay the claim. So any breach of a warranty is taken very seriously by insurance companies, and it makes them not to pay the claim. Immediately it is breached. And we call it, in law, we say it has made the contract to be void. That's what we call it. So we have to be careful of assignment and warranty when we are talking about claims and insurance. And then children, let's talk about career choice guide for insurance. Assuming you want to read insurance, or assuming you want to be an insurer, you want to work in an insurance company, or you want to work in an insurance broking company like me. What are those things that we need? Now you are in SS1 and SS2, so listen carefully. You need to have 5 credits in your WAEC or NECO, that's your school SAT. And the 5 credits must include mathematics and English. And if you want to read insurance itself, apart from mathematics and English language, you have to credit economics or commerce, and then not less than 2 other subjects to get your at least 5 credits in order to read insurance. It may also be that, like me, you don't want to read insurance in the university or polytechnic. You want to read another course altogether, like I read law. Therefore, assuming you are to read law, what you will be looking at is not less than 5 credits, including mathematics and English. Then you'll be talking about government or history or civic education or economics, and other things. So those are the areas you'll be looking at. You may want to study anything at all, even if it is medicine. You may want to have two professions like I now have. You are at liberty to not just study insurance in the University or Polytechnic, but to study any other course and graduate. And then you will also apply to read insurance or other courses in the University or Polytechnic through JAMB. You have to take your Universal Tertiary Matriculation Examination, UTME. And in choosing the courses, the 4 subjects that you take in your JAMB, if you want to read insurance in the university or polytechnic, you then must choose mathematics, English language, the 3rd one being economics, and any other subject. As you know, you take 4 subjects in JAMB. But if you want to read any other thing that is not insurance, you can choose, let's say you want to read law, you can choose English language, you can choose literature you must choose English language, literature in English, and you can choose government, you can choose CRS, you can choose any other thing actually. And then when you have gone through your university and you graduate, you can apply to work in an insurance institution. You can apply after a youth corps, you can apply straight to work in a corporate environment, or you can decide even whilst you are in the university to start reading for your professional exams. But most of the time, it is advised that you graduate first, start work, and then start reading your professional qualifying examinations in insurance. That is the Chartered Insurance Institute, London. When you finish reading it, then you will gain what we call ACII, Associate of the Chartered Insurance Institute. Or you may read your professional qualifying exams in insurance in Nigeria with the Chartered Insurance Institute of Nigeria. And you have the qualification that we call AIIN, Associate of the Insurance Institute of Nigeria. You may also decide to even further go ahead to qualify as a fellow after you have gotten your associateship. If it is with the Chartered Insurance Institute, London, you get your FCII, or the Nigerian equivalent, FIIN. But to be a professional insurer, you must have your ACII or AIIN. Otherwise, even though you have read insurance, you will not be deemed to be professionally qualified in insurance. And if you're not professionally qualified in insurance, you can never progress by way of promotion below the post of a manager. It will stunt your growth in the insurance industry, and you can never ever dream to be a managing director, chief executive officer in any insurance institution if you are not professionally qualified. And when you become professionally qualified, you can work in an insurance institution. I mean, by insurance institution, I mean you can work in an insurance company. You can work in an insurance broking company. You can work in what we call a loss adjustment company. You can also work in government, insurance desk of government agencies, or you can work in the insurance desk in the private sector, like all companies. You can be their insurance manager. So these are the career path in insurance. And I hope you have understood that, children. And then let's look at, let me conclude by going through the universities and polytechnics in Nigeria that offer insurance as a course. For the universities, you have University of Lagos, University of Benin, University of Uyo, Ahmadu Bello University, University of Jos, Niger Delta University, Joseph Ayo Babalola University, Redeemers University, Gregory University, Uturu. And then for the polytechnics, you have the Ibadan Polytechnic, Lagos State Polytechnic Ikorodu, Federal Polytechnic Oko, Federal Polytechnic Offa, Rivers State Polytechnic Bori, Federal Polytechnic Ilaro, Institute of Management and Technology Enugu, the Ekogu Polytechnic Saki, Oyo State. And so, my dear children, if you have understood this morning stroke afternoon that for you to insure your vessel or any vessel at all, you have to, before it even sets sail on sea, you have to insure it and obtain marine hull and machinery insurance. And then also, if you want to carry goods, you have to insure under the Institute marine cargo clauses, whether they are clause A, which is a very wide cover, or clause B, which is a limited cover, or clause C, which is the most limited cover. Clause A being expensive, clause B being less expensive than clause A, and clause C being the cheapest cover. You know, you have to obtain that insurance before your goods are put on top of a vessel. And then if you have understood that, and we've gone through the processes of knowing the processes of claims when a loss occurs, and you know what documents you are supposed to submit, or a client is supposed to submit before that claim is settled. We've also looked at the principles, some of the principles of marine insurance. We've looked at the duty of utmost good faith, telling the truth about that thing you want to insure. We've looked at insurable interest, the person wanting to insure being in a situation where he stands to gain by the safety of that thing that you want to insure, or in a situation where you lose if any harm comes to that thing you want to insure. That is insurable interest. And once you have established that, it then means you can procure an insurance cover, a marine insurance cover for that. And we looked at proximate costs to ensure that that thing that caused that loss from occurring is actually insured by our insurance policy. We looked at indemnity, and I did tell you that indemnity is that thing that you have paid for when you buy an insurance policy. And what it is saying is that you will be put exactly in the same position that you were before the loss. It will not make, insurance doesn't make you any better. If it makes you any better, then it then means that you are playing pool where you stand to gain more than you have actually put in. Insurance is saying, I'll put you back to that position that you were before the loss. I'm not going to make you any better. I'm not going to make you any less. And then we looked at what we call the twin issues that come out from indemnity, which is subrogation and contribution. And my dear children, we looked at the career path to becoming an insurer like me, a professional insurer like me. It takes a lot of hard work. It takes a lot of dedication. It takes a lot of focus. And indeed, for every profession, for everything that is good, you have to have that dedication. You have to be focused. You have to say, this is what I want, and you work hard for it. And then, of course, coupled with the grace of God. I have reeled out the universities that offer insurance. I've also reeled out the polytechnics. And I told you, graduating alone, whether in insurance or not, does not make you a professional insurer. You have to take your chartered insurance examinations. Whether you choose to do it with the Chartered Insurance Institute in London or with the Chartered Insurance Institute in Nigeria, so that you can be professionally qualified to practice insurance. And acquisition of them will make you not to be stunted in your growth in the industry. I hope I have spoken to you well enough, and hopefully in a language that you understand. I don't know whether I made it easy for you, my dear children, but one thing I know is that I wish you the very best, and I'm open to questions, not just here, but outside of this platform, through the convener, Mrs. Williams. Thank you very much, and good afternoon while I wait for your questions. Mrs. Williams, you're muted, please.
Okay, good afternoon, Ma.
Yes, good afternoon.
Okay, we are grateful for this wonderful, very wonderful presentation, if I must say. And I actually agree that it has been a presentation with a language that the children understand, that the students understand. Few questions from some of them have been trooping in. One of such questions is that, can a science student study marine insurance? That is, a student in the science department in secondary school. Can they study marine insurance? Another one from the same person is marine insurance mandatory? Is marine insurance mandatory? Another
May I
one
answer those ones?
Yes, ma'am. Yes, ma'am. Before we go for them.
Go ahead, please. Go ahead.
Okay, ma'am.
Okay.
Another question here says that, is marine insurance a male or female dominated field? Is marine insurance a male or female dominated field? How much does marine insurance cost? How much does marine insurance cost? Another question says, if I don't study marine insurance or insurance in the institution, how can I become an insurer? How can I become a marine insurer? Those are the questions we have so far.
Okay, thank you, students. Let's go through the questions one by one. The first one says, can a science student study marine insurance? And let me say one thing, please. What you study, you know, when you go to the university to study insurance is insurance, not marine insurance. And when you go to the Chartered Insurance Institute to read for your professional qualifying exams, what you study is also different courses in insurance, not limited to marine insurance alone. But when you start when you start progressing in your academics, like you want to do a PhD in insurance, you can decide to then specialize in marine insurance. For me, I never read marine insurance as a course. I read insurance, generally speaking. I didn't read marine insurance as a course at all because my first 2 degrees were in law, as you heard today. And then I started reading insurance at the Chartered Insurance Institute, London. And then most of what I know are from either practice or from reading, because I like to read a lot. And also having interest in a particular subject. I took interest in marine insurance. And then I started attending different courses in marine insurance proper, because if you want to service a particular industry, those in the maritime sector, you have to understand the insurance of the business that they do. And that's how I veered into it, and then started teaching marine insurance at the Nigerian Chamber of Shipping. And so a science student can study insurance. A science student can do any aspect of insurance. I already said when we were talking about a career path in insurance, whether you call it marine insurance or not, I already told you that you could even be a medical doctor and decide that you are veering into another profession, like I have done. I am first and foremost a lawyer. That is one profession. And then before I then made insurance my second profession. So the door is wide open for you. It's a question of choice and what you want. Second question is marine insurance mandatory? Is marine insurance mandatory? I don't know whether I got this question fully. Did I, please?
Yes, you did, ma.
That is just the question. Is it mandatory? Because it didn't say mandatory to what. I need to understand what was going inside the head of the student so that I can answer him properly.
Okay, what the student is trying to ask is insuring vessels on sea if they are mandatory?
I understand now. Okay, I thought he meant reading marine insurance. Okay, what he means is obtaining of marine insurance policy, whether it is compulsory for one to have that. The answer is yes. You can never fly a vessel anywhere, even if it is within Nigeria, without having your marine insurance certificate. Otherwise, you will be operating illegally and you will pay heavily for it, you know, if you are caught. Not to talk of navigating in the waters outside of Nigeria. So it is compulsory to have a marine insurance policy before you start operations, whether it is for the vessel or whether it is for the goods that the vessel is carrying. It is compulsory, it is mandatory. And the third question is marine insurance a male-stroke, female-dominated field? Serious question. I can tell you that there are not so, well, there are many females in the insurance industry, but I know that we are not up to half of our male counterparts. That one I can tell you, you know, so when you say male-dominated, there are much more men than the female in the insurance industry. But one thing I can tell you, young ladies, is that do not look at the numbers at all. look at what you want to achieve and focus and go ahead and grab it. Do not look at how many men, how many females. For me, gender has never been an issue in the things that I do. I see myself first and foremost as an individual, as a person created by God who has the same aim and objective with every other person, you know, that is gunning for the same thing with me, regardless of the fact whether they are male or female. So do not be deterred. Don't even allow such questions or ideas to becloud your judgments. Just get on with it and you will be there. I can assure you, there are so many of our male counterparts that respect we female counterparts and vice versa. You know, so the important thing is knowing what you do and offering what you know how to do best. Then I have another question. How much does marine insurance cost? Okay, the question is not one of it costs this amount of money, it costs that amount of money. I'm sure what you mean is marine insurance policy. How much does it cost? Assuming Felix Okoli wants to insure that vessel, how much would he have to pay for it? It is not a straightforward answer. First of all, you, that is the person seeking to obtain the insurance policy, will have to tell the insurer how much a vessel is worth. It may be worth $1 million. It may indeed be worth $5 million, you know, or whatever. It may be a small sized craft that is worth, say, for instance, about $200,000, a little. I'm using dollars, I'm sorry, children, even though we're in Nigeria. I did tell you that marine insurance is of international nature. So it is mostly denominated in United States dollars. That's why you see me reeling off this. The person that wants to insure, that will put value on of what you think the vessel you want to insure is worth. But it doesn't mean that it is whatever you claim that you're going to insure it at the end of the day, because the insurance company will send a marine surveyor to survey it and determine the actual cost, actual value of that which you are trying to insure. And then what you pay for it will then be determined by how much it is worth. It will also be determined by where the vessel is going to ply, whether it is only within Nigerian territorial waters or outside of territorial waters, whether it is going to ply in countries that have been classified as war-torn zones, whether it is going to ply in troubled places, or it is going to ply through a more secure route. And then when you are doing cargo, also cargo insurance, it depends on the type of cargo that you want to insure. That kind of cargo, is it perishable? It could be food that can spoil. It could be food that has expiration date. It could also be vaccines that are supposed to be stored in certain temperature. So many things account for it. It is not something I can answer right here and now and tell you it will cost you X amount. So when all of these things are put together, then the insurer will now compute how much you pay, how much your premium is. And then the last question says, if I don't study marine insurance, if I don't study marine insurance or insurance in the institution, how can I become a marine insurer? Let me remove the marine and say, how can I become an insurer? Because when you have become an insurer, then you have come into the marine world and other insurance world. But maybe what will then be is for you to indicate interest to work in the marine insurance department of an insurance company. You don't have to study, like I said before, you don't have to study insurance or marine insurance in an institution before you can work there. I never studied insurance at all in the university. I studied law like you have learned today, both my first and second degree. And I only studied insurance as my professional qualification in insurance at the Chartered Insurance Institute, London. So you can be who you want to be, study what you want to study. But if you have a love for insurance, then welcome to my world and take the professional qualifying examinations. And mind you, I did say to you, you can even go to the university and study insurance and graduate, but you are not a professional insurer until you have taken your professional qualifying exams and you are chartered. Otherwise, it will stunt your career progression. You cannot go beyond the manager in an insurance institution. And you can never be a managing director, chief executive officer in any insurance institution, except if you are professionally qualified as a chartered insurer. Thank you. I don't know whether there are more questions, please. Or
Yes, ma'am. There are more questions. What is the difference between marine cargo policies and marine hull policies? The difference between marine cargo policies and marine hull policies. Then another question is, if the premium wasn't enough to indemnify the insured before the accident, what does the insurance company then do? If the premium wasn't enough to indemnify the insured before the accident, what does the insurance company then do? Then another one says, those insurance policies cover more than third party. For example, when 4 vessels are involved in an accident, this person is trying to ask if insurance policies cover more than third party. For example, when 4 vessels are involved in an accident. That is all for now, ma'am.
Thank you. I'm excited and I'm indeed laughing and smiling here. And actually, from giggling from ear to ear, I have a very brilliant class. I am excited because of the kind of questions. You know, it means you're thinking outside the box. You know, even things that I didn't tell you, those ideas are already flowing in your heads. Congratulations, students. You said the first one is, what's the difference between cargo and hull? Hull insurance is the vessel itself. I told you, hull is the body mass of the vessel. The body of the vessel itself is called hull. And then because the hull is not just the body of the vessel, it is propelled by an engine. So that is the machinery. So combination of the two, you get your marine hull and machinery insurance. That is your full policy. So that one is the insurance policy that covers the vessels itself. Then the cargo is goods conveyed either by sea or by road or by air. It is the conveyance of goods. Cargo are the goods themselves, you know, that are conveyed. I don't know whether the person has gotten the difference now between cargo and hull. And definitely. The next question is, what if premium wasn't enough for indemnity in order to indemnify the person that has an accident? It is very exciting. Children, listen very carefully. The premium that you pay to have your insurance policy is not what is used to pay your claim. And indeed, most of the time, the payment of the claim, most of the time, is much higher than what you have paid as your premium. So the premium that you pay is just to secure that you have done your own bit to buy insurance. And the insurance company is saying, if you buy from me and pay me X amount, I will be there to repair your damaged vessel. I'll be there to replace your vessel that has been lost. And therefore you will ask me, how can an insurance company be now paying out more than they are taking from people as premium? Because it is a pool. It is not all the time. Premium policies are typically renewed every year. And then say, for instance, if I have 10 clients that have insured 10 vessels with me, and they pay me X amount of money. Maybe they pay me 1 million naira each. And out of the 10 people, I have a premium, total premium of 10 million naira in a year. I may be lucky in that year, no person at all will have a claim. No person will suffer a loss. And it then means if nobody suffers a loss, my 10 million naira as an insurance company is still sitting there, you know, making, running at an interest for me, waiting for when the claim will happen. It may also be that out of the 10 people, only one person might have a loss. And that person who has insured for 1 million naira, mind you, the person didn't pay me 1 million naira. The person is saying the value of my vessel is 1 million naira. The person might have paid me, it might even be 50,000 naira premium that the person paid me. But it means if there is total destruction of that vessel, I will pay that person 1 million naira. And it might be just one person out of the 10. So sometimes you win, sometimes you lose. So it doesn't have anything to do with the amount of premium you have paid. If you have paid me, even if it is 10,000 naira that the insurance company charged me as premium, and I pay, and then I go on to secure a loss of 900,000 naira. My vessel, I insured it for 1 million naira, and I paid premium charged of 10,000 naira. The insurance company will go ahead and pick it up for 900,000 naira. So the question of premium not being enough to secure indemnity does not arise. And the third question says, I love this one so much. You know that, what about this cover? If there are more than a third party, and then there are about 4 vessels involved. Now let me tell you, anybody who is not the insurer, anybody who is not the insured in the example I gave you, like Felix in the example I gave you, and took out an insurance policy with XYZ insurance company. I told you that Felix and the XYZ insurance companies are first party and second party. Any other person that Felix's vessel, you know, damages, they are all third parties. A third party may be more than one, like you have cleverly thought about, like you have intelligently talked about. There could be 4 vessels, there could be, in which means all the other people apart from Felix, all the other vessel owners, they are all third parties. It might even be that Felix went and he spoiled, you know, other installations, not even vessel. The vessel went and spoiled some installations. Those are all third parties. It might even be people standing by. They are all third parties. It might even be that Felix's vessel was carrying oil and then there was damage and the oil spilled and then spoiled the aquatic lives, fish in the sea, and then people living around, you know, polluted the environment. They are all third parties. So the list of third parties are endless. Third parties are those that would have been injured, either their property damaged, or they had bodily injury, or in fact, they died as a result of operations by Felix in our example. I hope that has answered you, please.
Yes, ma'am.
I see I have more questions. Don't I?
Yes, there is one, because we have a mentorship platform, actually, aside this platform. There's a question there that says that if there is a natural disaster, does the insurance company pay?
Very, very fantastic question. The class is getting way ahead of, you know, where I had put them when I started. Honestly, I'm excited. I'm really, really excited. Very good question. You're welcome. If there is a natural disaster, will the insurance company pay? There are acts that we call acts of God. You know, typically acts of God constitute exceptions to an insurance cover, except where they have been brought back into the policy and a higher premium charged. That is when, you know, you then can recover. But generally speaking, they are not.
Okay.
Okay, thank you, ma'am. Another question from the platform is, how are premium amounts fixed? How are they fixed on?
Yes.
How are premium amounts fixed on insurance policies?
Yes, and I did talk about that when I was speaking. It is not a straightforward answer, premium amount, but I've told you the things that a marine insurer will put into consideration while fixing premium. One of which is, what type of vessel is it? Is it a tugboat that is typically used for rescue operations? Is it a vessel that is going to carry human beings? Is it a vessel that will carry cargo? What kind of cargo will they carry? Are they things that are perishable, or are they not? Which area is the vessel going to ply? Are they war-torn zones? Are they zones that kidnapping and ransom are rampant? Are they zones that piracy is rampant? You know, all of these things, you put them into consideration. And then the age of the vessel itself, how well the vessel has been maintained, also comes into play. Then the insured, the owner of the vessel themselves, are also looked at. Are they good corporate citizens? You know, are they people that take the issues of risk management very seriously? Or are they the kind of people that are careless with issues of risk management, in which case they'll be very much prone, you know, to claims. So all of these things, and then the value, of course, that you have placed on your vessel, you know, so all of these things are put into consideration before arriving at the amount of premium.
Okay,
there's a question here, ma'am.
Yes, please.
From our chat, from
yes,
our
please.
mentorship chat.
Yes,
she says, like all these ferries they see on the Lagos waters,
yes,
are they insured also? Are passengers insured also?
Very good question. Very, very fantastic question. My answer is going to be very practical. They are supposed to be insured, but whether the insurance certificates they are carrying are fake or not is another matter entirely. But they are supposed to be, and if the insurance is a genuine one, it then means that the passengers are insured as well.
Okay, 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 okay. Jide, is there any question from the chat box?
None from here, none. We've asked all questions on the mentorship platform too.
Okay. So, Ma, we've taken so much of your time. We're supposed to have started 11 to end at 12. But this is 1 minute after 1 o'clock.
There is one more question. The question says,
let Madam leave.
Anything for the children, please. I'm just fine.
The question says,
okay.
How are you able to manage insurance and law? How are you able to manage practicing insurance and law? And another one says, if those who are not invited on board carries out any harm on the vessel, is there any insurance cover to this? That is, if those who are not expected.
I understand very well. Okay. The first one is, how am I able to combine insurance and law? I would say it's been a fantastic and interesting journey. And because when you read law and then start doing insurance, your legal background then helps you to appreciate insurance the more, because insurance is filled with terms and conditions. law clauses, that are legal in nature. So it stabilizes you a lot and it gets even more interesting. So I would say it is a very big plus, no doubt. Because what you see in insurance, they are filled with legal principles. That is insurance. Then the terms and conditions are all law clauses and all of that. So it has been an interesting journey, that I can say. And then the second question says, how about people that are not invited into the vessel and they cause harm in the vessel? Very, very good question. Ordinarily, immediately, I would consider those as pirates. Pirates. Yeah. It could be that they also came there for kidnap and ransom. So both piracy, kidnap, and ransom, generally speaking, are all exceptions to insurance, because insurance does not recognize illegality. And therefore, before now, all acts of piracy or all acts of kidnap and ransom were not covered by insurance. But because they have become rampant in the world that we live today, kidnap and ransom in the high seas, they've become so rampant. And then also piracy become rampant also. So insurers started classifying them as what we call 21st century perils. And therefore now some have started recognizing them and agreeing to insure them, but not without limitations. And so if you have a policy that has not extended their cover to cover these type of things, then they will not be picked up when there's a loss. But if you have a policy, on the other hand, that your insurance advisor has been prudent enough to negotiate that for you, and you've extended it, up to a certain limit, then they will pick it up to that limit. Otherwise, generally speaking, insurance does not recognize illegality. Thank you. Any more questions, please?
I don't want to believe so. It's true. Because we're really taking so much of your time, and I know you're a very busy woman. Okay. Once again, we say a very big thank you to you. You can see that from the platform, the children, they really enjoyed your childlike presentation, not the technical advanced insurance, but you've broken it down in such a way that they understand and they could ask questions that are really, which shows that they really flew along with your thoughts. So on behalf of all the students and all the lawyers on the platform, I can see my elders, Mrs. Orakusi, I can see so many maritime lawyers there. In fact, Mrs. Orakusi said, oh, a brilliant presentation. I say a very big thank you for you to, out of your tight schedule, to come and, number one, sponsor this program. Number two, to make yourself available within a short notice. Thirdly, to take much of your time to give to the children. We say a very big thank you on behalf of the students and everybody on the platform. And we hope that very soon again, you'll come once more to educate the other team that will come on board. So on behalf of all of us, we say a very big thank you, ma'am, and have a wonderful weekend.
Thank you. Bye-bye.
Bye.
Bye. Thank you.
Thank you, ma'am.
Bye, children. It's been a lovely day. And may God bless all of you.
Amen.
Amen.